Alison, I'm going to move to you next. You wanted to talk about the whole 10% of estate benefit and details on that.
Yeah, so this
in 5 minutes.
Yeah, this is the techie bit, which I'll try and do in 5 minutes. When talking to clients about their wills, obviously gifting to charity is something we always talk about, and everybody says, well, it's free of inheritance tax, so that's great, so I'll make some gifts to charity. Just a couple of things to remember. It has to be an EU-based charity to qualify for charitable exemption. And it has to be a registered charity, which not all organisations that you might think are registered charities necessarily are, so it's always worth checking that. But also, there is now this new potential rate of 36% on the estate instead of the normal headline 40% rate if you give 10% to charity. Sounds really simple, but you'll see in a minute that it's not quite as straightforward. And Andrew mentioned the Office of Tax Simplification earlier. You can guarantee when they change tax, it's never simplified, and I'll come on to that. But just before that, there's different types of gifts you can make in a will. And again, people should remember they can make a specific gift to charity, so they can leave an item, a property, a share portfolio. Doesn't have to be a sum of money. Can be a sum of money, a pecuniary legacy, or it could be a share of residue, so whatever is left over. Legacies get paid first, so they take priority. So if somebody is thinking of giving money to charity, or indeed to anybody, they need to think about, well, that will be paid first out of the estate before the residue is split. And also think about whether those gifts themselves are going to be free of tax or subject to tax. If you were to leave, say, £100,000 to charity and the residue to children, that's fine. The gift to charity is free of tax. But if you turned it round and this time said, well, I'll leave £500,000 to my children and I'll leave what's left to charity because I want the kids to get paid first, do the kids get their gift free or subject to tax? Because the charity can't pay tax. So if you want the children to get £500,000 after tax, we need to gross the gift up, so they'll get more than 500,000 because they get £500,000 plus the tax that's being paid. So it's something that always have to think about and talk to clients about is where is the tax going to be paid from? It's similar if you split the residue. So you often see people say, well, I'll give X% to my children and I'll give Y% to charity. Again, are those shares split before or after tax? Because if it's not covered off, you get into some nasty case law about where should the tax be paid, and do the charities get a grossed up share so that they're not bearing tax, so it's equal after tax or equal before tax. It gets messy, so it's something that has to be discussed. But this 36% rate, so I leave 10% of my estate to charity, great, the estate bears tax at 36% instead of 40%. But there are components to an estate that have to be considered. Lisa, you've got to cut me off when I go over my 5 minutes, okay? So three main components. You've got what's called the survivorship component, which is assets held as joint tenants that automatically pass to the survivor. You've got the settled component, assets held in certain types of trust, what we would think of as a life interest trust usually. And you've got the general component, which is your free estate. You can leave that by will or intestacy. Each component has to have a gift of 10% to charity for that component to get the 36% rate. Still with me so far? I'll give you an example, see if this helps. We've got an unmarried lady. She's got an estate of 760,000, of which she's got a house that's 560,000 and a business interest of 200,000. And she's going to leave it all to her sister. She's got a lifetime gift that's come into the equation because it was made in the last 7 years of 60,000. So if you've got a pen and paper, her total estate is 760. You take off the business relief that would apply to the business gift because we're getting BPR there, subject to Andrew's predictions with his crystal ball. We take off our nil rate band of 325, but we've got to add in the lifetime gift. So that gives us a taxable estate of £295,000. And at 40%, that would be £118,000 of tax, okay? She's left nothing to charity so far, but her sister says, no, let's give some to charity because we'll get a reduced rate of tax. The baseline for the 10% of charitable giving is £29,500 because we had a taxable estate of 295,000 because it's what's taxable after you've taken off the reliefs. So we took off the BPR, we took off the nil rate band, we were left with 295. So let's make a gift of 29,500 to charity. That reduces our rate to £36,000, and 29,500 goes to the charity. The tax becomes £95,580. You're just going to have to trust me on this. What it's actually cost the estate is £7,080 to make the gift to charity. So the sister's going to get a little bit less, taxman gets less, charity gets the gift, but the cost to the sister was £7,000. If you've got different components and they all want to get the same 36% rate, you have to make an election to merge them. And each component, the relevant person has to elect. So that could be the surviving spouse if it's jointly owned, it could be the trustees of a settled estate, it'll be the executors of the free estate. They all make the election within 2 years of death, they'll all get the 36% rate. But, and this is the sting, if they elect to merge, it's 10% of the merged amount. So the gift to charity is going to be bigger for them all to get the tax benefit. Last thing I'll mention is the residence nil rate band, because when the tax changes, you know something always gets missed out. When they allocated the reliefs that you deduct when calculating the taxable estate, the residence nil rate band does not get taken into account. I've lost you completely, but it means where I said I took off BPR and the nil rate band, you don't take off the residence nil rate band at that point, which is bizarre. Whether it got overlooked, missed out, who knows. But the thing with the residence nil rate band that we've always got to remember is if the residence falls into residue, then you will not get the full residence nil rate band if some of that residue is left to charity, because you have to leave the residence to the descendants. So if residue consists of the house and the family want to leave X% to charity, or the testator did, they're losing X% of the residence nil rate band. So it's better to have a specific gift of the residence to the family and then leave the residue to the charity and split it between the beneficiaries.